Welcome, welcome. Let me stop sharing. Hello, everyone. I feel it's been ages. Okay, right now I can't even see anyone. Hold on. All right, hello, everyone. I'm like, who are these blurry people on the screen? I feel it's been ages. I've seen folks. Hi, Reggie. Nice to see you. Hi, Pavi. Julie. Tosin, Jacob, Jackie, welcome, welcome. Some old faces and maybe some new, I'm not sure. But if anyone on here is new, and for anyone that's going to be watching the recording, welcome. This is the Monday Asset Management Zoom of the Multifamily Freedom Chasers community. And we meet, well, kind of doesn't matter how often we meet because that's going to be changing in the new year. But so far, we've been meeting every other Monday and sharing what we've been doing and who are we. Well, hold on. Let's see if I can pin her. Uno momento. That would be Bibi, who's based in Dallas, and we have been doing an asset management Zoom series. Bibi's based in Dallas. She's been doing this for close to a decade and a half. And then, I sauntered along in 2022. And the purpose of this platform is to show 9-to-5ers and non-9-to-5ers that financial freedom is attainable through commercial multifamily acquisition. We also have other types of programming. We do broker calls, underwriting, talk about the debt market, and then we bring on celebrity guests for those who might be new. I keep saying for those who might be new. Jacob, have you joined us before? I feel you have. Don't be
I
afraid
have
to.
before. I've been off and on. I've been trying to recommit to this. It's been a personal journey of overcoming procrastination and I guess you could say a flippant attitude towards my entrepreneurial journey. So I'm just trying to correct those errors and network with people. And if you will, and if you know the analogy, just put a sword of Damocles over my head to jump into this and stay focused.
Amazing, amazing. Why don't y'all put your info in the chat, network with people that way. Where are you from, Jacob?
I'm currently based out of the Phoenix metro area.
Cool, 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 cool. I know that there are people all over the country that tune in. So yeah, connect in the chat and get to know people, put your either phone number, your Calendly link, etc. These are the rooms where we find partners. And I'm not saying that hypothetically. These are the rooms where I found my partner. So it does happen. That sort of magic does happen. All right. You ready? Bibi? Yeah,
Oh,
okay.
yes, we're done.
That would,
Okay.
hold on, that would make sense for me
Don't share it.
to make you a co-host. Give me 1 second. There you go. All right. So I know today it's more like a review, right? A year in review. You know what I wanted to do? I wanted to show us our first Zoom for this year, but I didn't get a chance to
Do you
do
want
it.
to
But
go
huh?
ahead?
No, I didn't get a chance to put it together. I actually wanted to, show the recording of our first Zoom of the year. It wasn't our first time doing this because I think we started doing this in 2023.
Last year, yes.
Yeah, so that would not have been our first one, but it's amazing to see that we've gone through an entire year um doing, talking about asset management. We've shown you guys, talked about budget, how to hire a property management company, our wins, our losses, profit and loss statements. There was this time that Pavi threw me under the bus. He was supposed to be helping me as an asset manager or something, or a property manager. He didn't. Um, such a disaster. But we had and Sean that just joined, like abandoned me as a property manager. But we've had our ups and downs. But I think we're going to do what kind of like a year in review and then looking forward, right?
Yep.
So if you're ready, I will let you take it away.
Yeah. No, yeah, don't share it.
No, that's okay.
Hello, everyone. Good to have us again. And this is the final asset management meeting we'll be having for this year. So we decided to, relax, think about what happened in 2024, and let's see how we can make 2025 better for every one of us. We can make 2025 better if we are not able to reflect on what our successes were or our challenges were in 2024. 2024 was a year full of so much drama. So let me remind us, for those of us that have forgotten, it's very easy for us to forget how we started because we are just thinking about our present. We started this year with very high inflation. So if you've forgotten, remember, we started this year with very high interest rates as well. And we started this year with high groceries, high cost of living. And we started this year with very high immigration. And everything I've mentioned, everything I've mentioned have significant effect on the multifamily space. So today we're here to, first of all, discuss about how 2024 went, then we move forward. So in 2024, one of the things that happened was market shift. So because interest rates went high, it impacted a lot of underwriting and financing. So let me reiterate, the interest rate was very high. So deals that would typically work were not working any longer because, some of the things a lender would need to underwrite a deal is the interest rate besides the net operating income. So, but the better the operating income, the better you're able to weather the issues from the interest rates. But interest rate did not make so many deals work. So that's number one issue. So that affected financing. So before now, lenders were giving loans at 75% LTV, meaning that if you have a deal for 10 million and you wanted a leverage from the bank, they could give you 7.5 million leverage. But the beginning of this year started with some people were getting leverage of 55% LTV, 60% LTV. It was that crazy. So, and we know that the more you put in your own money, the more the deal does not work. So the more leverage you have, the more ability that becomes good. But we didn't have the opportunity at the beginning of the year because of the market shift. Also, renter demand evolved around the primary, secondary, and tertiary market. We saw a lot of secondary market and tertiary market growing. We saw them growing, and we saw some primary markets declining, like San Antonio. And San Antonio grew very well in the last 3 years since the pandemic. San Antonio was growing well, but right now we are seeing the rent decrease. We are seeing things cooling off. And not just in San Antonio, in some other markets that were doing very well just a few years ago, this year we're seeing things cooling off. So we're seeing rents cooling off, rents that went very high 2 years ago, now cooling off. Like in the Dallas market, let me tell you what we are seeing here. We are seeing rents cool off. So now people are not able to push rent to the market. We are seeing a lot of concessions. So all these things happen because of the market shift. And this thing has a large effect on the economy influence. We saw insurance going up. We saw taxes at its peak, insurance at its peak. We saw a lot of natural disaster. And truth be told, these things have, yes, it did not happen in your neighborhood or something, but these things have overall effect on the insurance companies. So they are increasing insurance all around, not just in one location. So everywhere we are seeing increase in insurance. So this happened in 2024. We are also seeing it's not all bad. It's not everything that was all bad in 2024. We're also seeing in industry innovation. I don't know how many of you have heard about AI helping for renter. Just with AI, it can help with the property management software to help you get renters to your property. So that's good stuff right there. So we're seeing industry innovation using AI and using different mechanisms to make the entire process better. We are seeing energy efficiency. So we are seeing properties doing value add in terms of energy efficiency. How do I mean? We are seeing people putting thermostats in their HVAC, trying to control. We did that in one of our properties. We introduced thermostats. We just don't want people going in and touching buttons and increasing it, and whereby increasing our utility bill. We wanted it to be automated and regulate, and in that we were able to save costs. We are seeing people also doing the keyless lock. People are using sensors, using their keypad to enter homes, to put on your HVAC and do that. These things are all ongoing in multifamily, and it's helping improve multifamily. So besides that, we also have some major challenges that people experienced. We are seeing, if you've noticed, you notice that construction went low compared to other years. This year and last year, construction was really low. And that was because of the cost inflation. So we saw a lot of construction pausing. So people are not even hitting the ground anymore. So people are just on the sideline and all that. So this has affected construction as it is. We saw tenants, some of them are remote permanently. Some of them are doing hybrid and doing all that. We saw these things happening last year and this year. And some major wins. What are some of the things that that happened in 2024? Like I said, not everything is all bad. Multifamily, despite the fact we had inflation, we saw multifamily adjusting to the market. That is, multifamily is the asset that can edge inflation. And it had that ability. That's why you saw rents going up. You saw properties appreciating. So many of us have been waiting for properties to go down so that to go low so that we can dive into the market. But we didn't see that happening. We also heard there was going to be blood on the streets. There was going to be a lot of deals out there, but truth be told, we are not seeing those kind of deals that we thought was going to be everywhere. Because we are seeing lenders just ignore. They call it pretend and hold on or something like that. It means that, yes, you're owing us, but we'll just pretend like we are not aware of what's going on and give you time to adjust. We saw that happening. So it's not making there to be blood on the street. So these were many things that happened in 2024. We saw rents going up and stabilizing. Now we are seeing rents very, very stable. So now let's go into 2023. 2025. What do we think that would happen in 2025? I forgot to mention 2024, we had a new election that will define so many things. So the decision most of us made will define how 2025 might go or might not go. So now let's dive into 2025. So what do we think will happen based on this new administration? First of all, before we dive into the common things that we think that might happen, if the next leader, Trump, tries to increase the tariff, is going to have overall effect on the price of items. So we're going to see labor going up. We're going to see material costs going up. Those things will happen. So that means construction might not be out there as we thought it was going to be, because we're thinking that from next year, construction will start. But looking at what we are saying, that might not happen if the tariff thing goes the way it's supposed to go. We're going to see that affect construction. And if we see mass deportation like what we are hearing, we'll also, because most of these people doing this type of job are a particular set of demographic, they are majorly into it, they are the blue-collar workers. We'll see them, especially the undocumented ones, we'll see them leaving the country, and that might affect labor cost happening. And if that affects labor cost, that means for even handyman's job will skyrocket because the demand for it is more than the supply. Whoever is doing it is not as many as before. Right now, you can get anybody to do stuffs for you because everyone is people are just out there ready to do the job. But if that happens, we'll see people leaving. And how will that affect the properties we're doing? You will see some of these properties that have high level of Hispanic that maybe the property management company did not do a proper screening on, or they didn't do based on merit. Maybe they just brought in any Tom, Dick, and Harry into the property. We'll see those properties having a lot of skips. What is skips? What are skips? Skips is when somebody wakes up in the morning and disappears. It does not, he has broken his lease on his own. He's not informing you, he's not telling you anything, he's out. Period. Is gone. We're going to see that happen, especially in that type of demography. A lot of skips will happen if the property management company did not do their job well. So that aside, so that is the effect of that. We're going to see maybe a potential for reduced interest rate or increased interest rates. Just like we've always been hearing that the government, the federal government, does not influence the Fed. So the Fed, they're independent in the way they take their decisions on how to reduce interest rates or not. So we are yet to see what that will look like. But with what is going on, because the economy seems to be very strong, we're seeing it. The job market is improving, it's still going up. Although the recent job report came out, the job market was good, but unemployment went up slightly. I believe the job market will be good next year in 2025, and employment will go down. And that's because of the administration. This administration, they do not encourage unemployment. That is, if you are able to work, you work. So I believe unemployment will go down and the job market will be stronger. And if that happens, that has a tendency, if the inflation is not put in check, which I believe is not yet in check, I believe that the inflation might tick up if that is not properly controlled. And remember, we still have the tariff to deal with. If that happens, inflation might tick up. So we don't know how that will be. So it's either interest rate might reduce or it might not. We don't know. But we believe that it will go down slightly, but it might not be as aggressive as some of us have hoped for it to be. We're also seeing an economy that will either recover or slow down. We don't know what that will look like because policies have a direct effect on how things happen or what happens to us, not just in multifamily. Policies affect directly. So the policy of a tariff might affect. So we don't know what that will look like, except if other countries are able to negotiate, and maybe that will not happen. But if that goes into effect, we don't know if the economy is going to slow down. So if the economy slows down, that means more investors will be on the fence, because investors don't like to invest when there is uncertainty in the market. I know some of you are in that category. Once you see there's uncertainty, you just go to the sideline. They call it pencils down. Everybody's pencil is down. No investing until we are certain of what is happening. So we're going to see that happen if the economy slows down. But based on what's happening, I don't believe that will happen. I believe we're still going to have a strong economy. Then we're going to see a significant growth in the suburban and secondary market. And that is just because of cost of living. We are currently investing in a secondary tertiary market in Pennsylvania. Let me tell you the type of growth that is coming in there is massive. We are seeing people leaving the urban area, leaving the city, the towns, the metropolitans, and they are relocating to those areas. One, the cost of living is cheap. People are living from paycheck to paycheck. So we're seeing people relocating. So we're seeing significant growth. So if you're looking at investing in multifamily and you don't know how to start up, or you feel that the metropolitan area, like the Dallas-Fort Worth area where I am right now, if you believe that is very competitive and still for you, you can try out the secondary, go and do a study on different secondary and tertiary markets and find out why there's significant growth. If you're able to study why there's significant growth in those markets, and it's justifiable because you must know why that place is growing. if it's significant, then that might be an opportunity for you to invest. So we took that bold step last year and we said we're going into that market. And so people were like, are you guys foolish? How would you leave a old Dallas Fort Worth? Invariably, we had 2 deals. One was in that town, in a rural area, and we had one in Dallas Fort Worth. And we presented the 2 to investors. I remember if you presented and they were like, if you know, we want the one in Dallas Fort Worth. They didn't want to go to the rural. And guess what? The rural area was a Class A. And the Dallas Fort Worth was a Class C, not just Class C, it was 1968. And we saw people interested in 1968 than a 2009 property. How did that happen? Just because people believed a lot in the cities, the towns, the metropolitan area, but we are going to see growth in the rural area, in the suburbans. We're going to see growth in the secondary market. So that might be something you need to look at. And for me, for one, I am really looking at secondary market at this point because the opportunities there, those are places where we see pops and mas, people that have owned properties for a period of time and they are old, or they've owned it for long and they want to exit. So that might be an opportunity for you to go. We are also seeing increase in affordable housing. Like I said, inflation has eaten deep into so many homes and people are not able to afford the luxury that they normally used to afford. So we are seeing people looking for more affordable housing. And we're going to see the government giving incentives to people that can do affordable housing as well. So that will also come up for anyone. Affordable housing, I believe, is going to be a very good market for anyone that's willing to invest in that. As at this time last year, I was still saying I loved affordable housing. So my experience in this year has made me think twice if it's something I will go ahead to do. I rented my properties to affordable housing, the VA affordable housing people, and they trashed my house, not just houses, they trashed it, and I spent a lot of money to renovate it. So that's why I'm thinking twice. But if you have the bandwidth, you have the ability, that might be an opportunity for you to do such. People are doing it and they're making serious money. And don't forget, affordable housing pays premium to people that can do it because not everybody is open to doing that as it is. So that's for demography shift. We're also going to see tenant preference. We're going to see focus on sustainability and also flexibility in living. So for people that are doing a hybrid, we'll see an opportunity for you to introduce a form of design your house in such a way that will help them love your house more, and it's going to help your tenant retention. That is, let's say you have a 4-bedroom, you can convert one to an office and sell it or rent it out as three-bedroom and an office. We did that too on our property. We rented it as 3-bedroom and an office, and that would be very attractive to people that are working from home. And you can also decide to do a remote office in your as an amenity. So you might have a free space where they can have access to an office-like kind of setting. You can use that as value add as well. So these are new innovations that are coming up. So you can convert a space, maybe you're leasing off. If you have a very big leasing office, you can take a room there, convert it to an office workshop, office station where your tenants can come in if they are remote and they're just looking for an office space to do maybe an interview or a meeting. That might be somewhere they can come and rent from you and have that meeting. So we're seeing that happening in real time. So you can take advantage of that. So 2025 might be a good time. We are also seeing AI playing a significant role, especially in automation in property management. Like I mentioned at the beginning, I said AI is helping people rent out their houses through property management softwares. So the more now we need to start looking for property management companies that are open to AI or are able to use AI to make things more effective and all that. Smart home factors, we're going to see that increase more. We're going to see people, because I've been underwriting some deals and I'm hearing brokers saying, yes, you can. The value add for you for you to add keyless door, add sensor, add this, there, add what do you call it? Thermostat. Now, it was not this, there was no demand like this before now. It's on the rise. So we're going to see that happening in 2025. And we're going to, so that might be an opportunity for you to introduce that as value add to your renters. But remember, anything you're adding as value add must bring out a significant return on investment. If they're not giving any return on investment, or you're not getting some kind of rent bump or some kind of additional income from it, please be my guest, don't do it. You're not a charity organization, you're here to do business, but also if it's going to help customer service or retention, because there are some services you can perform that is not monetary, but it can bring about retention. One thing you want to have is retention. You want to retain your tenant. So that is also a value on its own. You're not having significant turnovers, because more turnovers you have more cost in repairs. That means you'll be turning over those units as soon as they leave. You'll be doing renovation costs. Those costs will go up. So you want to also retain your customer, your tenant. If that will help your tenant stay longer, please go ahead and keep them. We are seeing a lot of green building practices. People are putting solar, renewable energies. They're doing that. And another beautiful thing we are seeing in terms of capital raising, we are seeing crowdfunding. I was on WhatsApp very actively looking at the chats on WhatsApp, and I noticed somebody was saying invest in a deal and pay $5,000. So crowdfunding is becoming a norm. People are investing in crowdfunding, and we are seeing equity partners as well, equity companies, private equity companies in the rise. We are seeing more government-backed financing for affordable housing. Like I said, governments are helping out because we are seeing a lot of demand for housing. So some people can't afford. So government is stepping in. And you remember what one of the plans the new administration is going to have? They said they're going to release government-owned lands to start building houses, and the process for you building on those places is going to be significantly short. You know, before now, to get permits to start building used to take a very long process, especially in states like California. California can take you 2 years. I remember we were trying to build a single family then, and 1 year plus, we had not gotten the permit. I was just almost going to 2 years. We had not still gotten the permit, and that was it for us. We pulled out of the deal and all that. So, but this administration, they want to make it easy, remove a lot of bottlenecks, government and allocated areas, open it up for development and all that. So the government is really, really going to play a significant role in housing because of the demand. There's a lot of demand for housing. So if you are not yet invested or investing in multifamily or any form of real estate, I think you are missing out on opportunities that will come. Based on what we are seeing, we are going to see, because the inventory is low because of high cost of construction and high cost of interest, people don't have, construction loan is expensive and all that. Now, new build is in some locations are on the low and all that. That means what we are projecting in 2 years from now is we're going to see high demand and low supply. And if there's high demand and low supply, that means rent is going to go up. So in my underwriting, I'm making provision for that. I am assuming that next year is going to even out. Things are going to be balanced. The market will cool off significantly next year because people are just we're gradually coming out of inflation recession. Let me put it that way. Some people don't believe in recession. So I'm going to say inflation recession and all that. So some people don't believe that, but really, we believe what we are seeing based on not just me, different aspects is 2026, 2027 is going to be an increased demand for housing because we have less housing for the population that is coming on board, that is around. No, housing is at a high low. I mean, highest is very low at this point in time. So if you're buying multifamily right now and you're buying it well, I think better days are coming. So that's for that. Market evolution. We're going to focus on high growth emerging market. Like I said, we're going to see markets new markets emerging. Things will start happening. Like one of the markets, I went to one market in 2000. That was in Maryland. They call it Cumberland. The market used to be very good, but all of a sudden it became a graveyard. But I went there recently and I started seeing growth. I was surprised. I started seeing they said people are coming here to retire because the houses they are cheap. As at 4 years ago, you could buy a house for $10,000. A house for $10,000. All you need to do is to renovate it and all that. But now the houses they are going for 140, 140, 100,000, 160,000 and all that. So we are seeing growth coming into some markets. So you just need to be in the lookout. Where is the growth? Because don't forget, I said real estate, multifamily is local. Is not going, these things I mentioned is going to be different in different markets. So don't just assume that your market is going, do your work, do your research. That is why as an asset manager, just because you did an overview of the market or you did a study of a market 5 years ago and you're not doing it now, you'll be left for a shock because what happened 5 years ago might not be applicable to what is happening now. Seriously, we have seen market declining as it is. So you need to do a constant overview of the market. So that's for that. So what are the success strategies that we as investors, so now we've looked at 2004, what happened, a reflection of 2004, and we've taken a sneak peek at 2025. What are the things we think that might happen? Now, what are the success strategy that we should start implementing now that we're going into the new year? Now, the first thing for us is to start building strong network. Like your network is your network. I'll repeat it again. It's who you know, it's not how much you know. And I got to know that for a fact because I believe I know some things, but because I do not know the who is who, or I do not know some people that can help, I found myself, I was very limited. So it's not about how much you know, it's about who do you know that can change your life. So this new year, we need to start building strong network, intentional, not surface network, not the one for because I want to do a deal with you, you are my friend. After it, goodbye. No. Significant relationship. Those are what you're looking for. And the network I'm also talking about is not just your team members, like the immediate team member. I'm talking about brokers. You need to start having the right calls with brokers because you need to look for those deals that are not on market. Brokers will not give you a deal that is not on the market and that is off market if they don't know you. It's not possible. They won't give you. They will first of all go around their friends, the people they have a relationship with, or people that they know can close. Those are people they will go to first. So you need to start creating those relationships with brokers, with industry experts, with insurance brokers, with lenders, brokers, everybody. You need to start creating a relationship. The next thing is data-driven decision. So I'm going to do a video soon, and I'm going to talk about Class A and Class B. And my reason for mentioning that is because some people are driven based on the beauty of a property. They are not driven based on numbers. And when buying a property, don't look at an asset because you feel it's old and know that. The bottom line is, does it meet your goal in terms of returns? You can have a property that is as beautiful as anything, but the returns is zero, or you might not even get returns for many years to come. It might be due to the way it was bought. Maybe it was bought too high. It might be because of the cap rate. Maybe the cap rate was too low. Many conditions. So you need to start taking decision, not because a property is beautiful. Start taking decision based on data. It must be data driven. So like I always tell people, I make my business plan based on numbers. Any business plan I'm making, the numbers direct me. We do not just make a business plan up. Oh, we're going to increase rent. That's a business plan. I think that's what every majority of people say. The business plan is to increase rent. No, it doesn't work like that for all properties. Sometimes it might just be your business plan is to bring the best property management company on board. And that will help you retain your tenants. That's it. You might have a business plan just to make the place stable. That is it. As long as it brings back a form of return on investment that will either increase your income or reduce your expenses. So your business plan can be, I want to reduce the expenses on this property, and these are the ways I want to introduce ROBs. I don't want to be paying the tenants electrical bills. I want them to be paying it. That is your business plan. You are doing value add. You're not just coming to say you want to increase rent. So you need to, like I said, you need to have make data-driven decisions. Don't make decisions based on a look or how something looks like or feels like. No, it should be data-driven. The next one is what we need to start doing is disciplined underwriting. Last month, I wanted to partner with some people because all the deals I've got to do are deals that I've underwritten myself. So I've not really had the opportunity as a GP or a sponsor to jump in other people's deals. Not because I don't want to do that, but because I've not seen the right deal to jump into. So last month, I was open to doing that. I said, okay, I was going to jump into people's deal and see how I can partner with them. But in the process of doing the underwriting, because if you bring a deal, I'll definitely do my underwriting. So in the process of doing my own underwriting, there were a lot of loopholes. And I saw that they were just so aggressive on the projections. So you need to be very disciplined with your underwriting. Even if you feel that the market might turn out to be very positive, take a very conservative approach to it, but not at the detriment of killing the deal. So you must find that sweet spot between being conservative and aggressive. Because sometimes you can be overly conservative and the deal that is good now becomes bad. And you can be overly aggressive and the deal that is bad now becomes very good. So you have to look for that sweet spot. And everything should be data-driven. Like everything on my expenses is data-driven, is driven by my property management experience in the market, is driven by my experience in the market, is driven by the experience of an insurance broker, is driven by experience of a tax litigator's projection, is driven by my lender. So every number that you see in my expense sheet is driven by someone. It's not something I just wake up one morning. And the income is driven really by the local property manager and by my market research, what I see is happening. So these things, I can't just overly emphasize on how you should be disciplined with your underwriting, especially in this time. The market is going to cool up. We are seeing that happening real time, and it's going to continue in 2025. The next one is optimize property performance. That means start implementing cost-effective technology. Focus on high return renovation. Like I told you guys, we introduced a thermostat, and it's helping us reduce our utility bill. We are also doing keyless. It's making us reserve money because if a tenant leaves, you have to change the lock. So we are not doing that. All we need to do is just change the code, and that's it. So we're so efficient with that. And all that. Another thing we're also looking at doing is changing the windows. We are looking for windows that can retain heat, with that to reduce our electrical costs. So we're also looking at doing that. One thing we also did was we changed all our toilets. We changed 240 toilets. And that was because of the cost of, and that it brought our cost of water to about 40% below what we're paying. That is value add right there. So you need to start looking for cost efficient items to start using. That has reduced our cost of water, has reduced leakages and all that. So yeah, that is very important. Then mitigate risk, maintain reserve, and emergency. It's very difficult in this market. I won't lie to you, because we're even finding it difficult to raise the complete money, not to talk of reserve, but it's very, very important to raise reserve for your deals, because insurance can go up. You might have an emergency. Things you did not underwrite for, maybe you didn't see it happening. It might just happen. You might need an emergency money to carry out those things and all that. So mitigating risk. So challenges and opportunities. How do we seize them effectively? Rising construction costs, manage materials and labor costs, increases through efficient and practices. I just don't want to repeat what I said. So let's focus more on emerging markets. I'm saying it because it's something I'm going to do. Let's focus more on emerging markets because that's where the opportunity is coming right now. So, so I'm going to open it up for question and answers. And this is the last one for the year. So you can ask and ask and ask your question before we call it a day. If you're over to you.
I just realized I never shared the screen, but okay.
It's fine.
Sorry.
Thank you. It's okay.
All right. I think I'll go backwards based on what I saw.
Okay.
Daryl, are you asking if she reviews underwriting in general or underwriting that of other teams that she wants to partner with? Ms. Daryl.
It's both. Sorry, I'm driving right now, so it's
Oh,
it's
that's okay. Daryl, are you typing while driving? Lord
I
Jesus,
am.
have mercy on your soul.
Look. I was in a highly congested traffic area.
Reggie, he's in Atlanta. Go check on him. Bibi, Daryl is asking you if you review underwriting. And you heard the context.
Okay, if I review underwriting, like people's underwriting.
So I guess let me try and rephrase. I think he's asking if you're going to partner with someone who already has a deal, would you review their underwriting?
Oh, yeah.
Or let's say he has a deal, not necessarily looking for a partner, can he bring his deal to you for underwriting review?
It depends. It depends on my availability. So if I'm not going to be on the deal, but I'm just going to support you to know if that's the right deal for you. Yes, I've been doing that for people. Even though I've done that with you, you know that. So yes, I'm open to doing that, but I'm not open to doing it when someone books for my time and does not show up. I've seen that happen many times, and that is really annoying. So if you want to book my time, show up so that because I've moved some things around for us to have that time. So the only thing I'll ask you to do is show up.
Okay. For the broader group, thank you.
You're welcome.
And then Jacob was asking, I think you had mentioned about AI being incorporated in property management software. I think he's trying to find out which ones.
Yeah, I'm
Right.
not.
Oh, sorry. I was just trying to understand, as you said, she wasn't presenting, so I think you may have had the property management companies listed that may have been utilizing AI. You mentioned them, and I was just wondering if you could spell them or.
No, what we are seeing is a property management software. So we're seeing property management software synchronizing their software with those other software. So in LinkedIn, I've seen many people approach me to ask me if I need such services to be added to my property management software. So it's I know that a software like Demo. They have a package like that too that you can synchronize with your property management software and you do it and all that. Entrada just opened, they call it BI, business intelligence, but they call it advanced business intelligence, where they partnered up with an AI business intelligence company. And based on request, you pay some certain amount of money and they will synchronize their Entrada software with that app. And what that app will do for you is it will help you generate reports on a real time. You see everything on your screen. You see what property is doing bad, poorly, what is going bad. You'll be able to trace errors immediately. You will know where the loopholes are very easily. Then instead of you flipping from one report to another, it's going to give you an overview of the report, break it down to very simple terms. So we are seeing software apps introducing that. I also heard Appfolio too can do that as well. So it's just the app and it being synchronized with BI or AI.
Yeah,
Okay,
I think
got it.
that's what
Yes.
Merrill's business does dynamic KPIs. That's another one, but I don't know if they are just the AI piece or if they are the property management software and the AI piece, but they run these real reportings in real time.
Mm-hmm.
Yeah.
Yeah, I think I remember when you told me they were launching it
Mm-hmm.
sometime last year or so.
Mm-hmm.
Yeah.
Let me see. Um, I think Reggie was trying to you're looking for a term at some point and he was helping you out there, pretend and extend. All right. So does
Yeah, that was the
anyone
word I was looking for. Pretend
yeah,
and exactly. That's
yeah,
what brokers, I mean, lenders are doing.
yeah.
I have a
All
couple
right. So
questions.
yes, who's speak Pavi,
Javi,
how are you?
so I have a deal under contract. I'm in the process of raising money, getting soft commitments. One person I haven't reached out to yet is probably the person who could potentially write me the biggest check, and that's my former boss when I left my W-2 job and started working for myself. I know he's got a ton of money. He's been a successful entrepreneur for like 30 some years now. And not really sure how to reach out to him without having him shut me off, or what I guess what would be the approach to increase my chances of him at least considering, investing with me, rather than kind of blowing me off. Like we left on good terms. And I've reached out to him a couple of times just to kind of check in, say hi, how are things? And I've one of the messages was just, appreciate you, the private one-on-one lunches we've had over the years when I worked for you, that I've learned a lot of value from him, from those meetings, by talking to somebody who's been so successful. But now it's kind of the other way around, where I want to reach out to him, and what would be the best way to increase the likelihood of him saying, sure, I'll write you a $500,000 check, or whatever he's willing to write.
Does
I will
does he
defer
know you're
to
in? Sorry, go
Ife.
ahead.
I said I will defer to you on that.
Does he know what you're doing right now? Does he know you're in real estate?
Um, I did talk to him when I was leaving my job. So I gave him a notice almost a year and a half ago when I left, and I said two things. One, I have a little one at home that I feel like I'm not around enough, and I want to commit more energy into real estate, and I can't do it working this many hours for somebody else. So whether or not, that's stuck in his head, I don't know. Um, so not sure exactly if he is
Right.
aware of exactly what I'm up to now.
I think ideally, so this is not a text conversation. This is not an email.
Yeah.
If you're able to get him on a sit down coffee, lunch type of thing, face to face, and the reason I asked if he knew what you were doing is, and I don't know if you've heard me talk about this before, but and this is to the entire group, when it comes to raising capital, you really want to ensure that you have this, it's whether you want to call it a runway or set up this expectation so that you don't just meet people and say, surprise, I need 250 grand. And they're like, wait a second. There was just there was no leading up to that. That was what I did with my first capital raise. It doesn't work well. So since we're already here, we have the deal, you need the money, you don't come across as desperate. It would be a one-on-one sit-down meal. And then there are ways you can get him to do that. That's one. But two, when you do have that sit down, what are you asking him? It's about figuring out what his pain points are ahead of time. So if you know what his pain points are ahead of time, you're able to speak to that. If somebody's pain points are they make a lot of money, but they don't keep it because of taxes, well, you're not really going to be harping and going on and on about a self-directed IRA. That's not their pain point. Their pain point is they need to see this slice of commercial multifamily and how it benefits them. So, whether how you're going to get him to this sit down lunch, dinner, coffee, etc., with the great. I have great news to share. Hoping to, catch up with you in some way. Would love to take you out to lunch to share some exciting news, something along those lines. And then, you know him a little bit better than I do. But if he's a high net worth person, maybe it's about make the amount of money he keeps. That's the issue. Maybe he's not entirely. Maybe he's nervous about what his net worth is. Like maybe he's nervous about the economy. Maybe he doesn't like the zigzag stock market. Maybe he doesn't even invest in the stock market. Maybe he does and he's a firm believer in it. And he doesn't know any other way of investing. You're not going to know that until you start having certain types of conversations or asking questions to pull things out. Don't try and pitch on the first call. Try and
Yeah.
use
Yeah.
that first call to bring out.
Can I add something
Yeah.
to it? Sometimes it might not be for this deal. So, because normally you're supposed to have started having this conversation with him before you even started this deal. So I don't want you to go with the mindset of, is this deal? He must be on this deal. So just start that relationship now. Make him know, like my first partner, my current partner, the person that gave me the opportunity to start real estate in general. It took me 1 year to convert him. And guess what his pinpoint was? There was no way I could tell him cash flow. Cash flow was not it for him because he had money. Appreciation, no, that was not it because he loved his money in his account. So that was not going to work. The thing that made him do a 360 was taxes because they were slamming him with high taxes. So, like, what if he said, look for their pinpoint and use that as a leverage to provide a solution and all that. And don't go with the mindset that it's going to be on this deal because you didn't start the job on time. No.
Yeah. So that's kind of been my I guess in my mind, right? Like I've been gearing myself up for this. Like I've been talking to a lot of people. I haven't asked people specifically, can you invest with me? It was more like, I have this deal. This is what we are working on. If you're interested, I'll be happy to share more information with you. And some people are like right out, yeah, send me the info. I'll let you know. So I had one response today that somebody got back to, is like, yeah, actually, Chrissy, my wife, and I've been just wondering, like we got too much liquidity sitting around and we need to do something with it. I was like, hello. So it's like, but this is kind of a different person. Like he's the person who, when 2020 hit with COVID, like the first thing was, he's like, everyone stay at home, cancel all your meetings, and I will write a $2 million check from my personal account to the business account, and everyone will stay on payroll this year. That's kind of the person he is. So that's also why I didn't want to like just jump into it. And I agree with you, Bibi, that I don't want to go into it with the mindset I'm gonna ask him for money, that he will invest with me, but I don't want to like blow my chance at it if he does choose to invest with me. Because that could be like a one really significant ticket.
Show him the deal, do your pitch deck, show it to him and say, this is what you've been doing for like a year since you left him. So show it to him and he will start asking you questions if he's interested. But you can also put some highlight, maybe one bullet point and pitch deck to him. This deal is 5 million, is projected to make 10 million in 5 years, and these are the ways it's going to happen. Pa, 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 pa. That's it. It's the returns I will get in 5 years.
Yeah, thank you. I appreciate it. These are all good tips.
You're welcome.
And sorry, Bobby, I have a large blower behind me, so I couldn't hear a lot of what you said the second time around. But don't forget to go to the Freedom Chasers YouTube channel and look up those Keely Hubbard videos. All right, when she came, sometimes getting into that mindset, using some of those keywords that she uses, very helpful. Very helpful.
Yeah, I've signed up for her newsletter, but that's a good idea to go and rewatch that Zoom
Video.
from maybe a month and a half ago. It wasn't too long ago.
3 months or so.
Well, It's been busy since we get the deal under contract or since we get the offers in. Thank you.
Thank you. So I guess, do we have any?
other questions about
I would-
anything asset management related at this point? It's kind of like opened
This is the last meeting for the year, so please
for the
ask
year.
away.
What's the website to go look at the other Zoom calls? I haven't. I'd
Would
like
you-
to look up the other Zoom calls. Where would I go?
Multifamily Freedom Chasers on YouTube.
Okay.
I would add one more thing to what we were just talking about with Pavi. We were talking about it's networking and building a net worth. I really like what both of you said, and Pavi, I have kind of the same situation too. There's a man that I knew a couple years ago when I was delivering freight that I've reconnected with, and he's an investor. And that was a conversation I had with him too. And one thing I found was to, yes, present like what you do, but find out if it's even what they're interested in at all. Because, you know, especially high net worth individuals, they have their own niche that they like, but it's presenting either them being interested or anyone that they might know. Because high net worth individuals, they know other people too that are also investors. And when, you know, one of my experiences first getting into studying real estate was a broker that wasn't in alignment, but he introduced me to somebody who was, and it turned into another relationship. So yeah, it's just not that one size fits all. It has to be this one thing.
Mm-hmm.
Yeah, and another thing too is when people are successful, they're gonna cheer you on for you being successful as well too. You don't keep a thoroughbred in the stable, you know, like, so you leaving that company to take care of your family and your future, whatever, is not something that someone would look down on. They would cheer you on for that. I don't know if that helps break the nerves or whatever, but
Mm-hmm.
and I'm still starting off myself too, so I'm not saying it from an exalted perspective, but it's just that long-term relationship. One relationship leads to another, and it's who you can help and that energy and mentality.
Yeah, absolutely. And you know, it's very easy to lose track of time because the last 8, 9 months has been all about I know what I want in real estate, and that was multifamily. So I got my mentorships, and I've been just powering through the content. I've been underwriting, touring properties, talking to brokers, and we get some offers out. And then when finally an offer get accepted, or we're invited to do the best and final offer, now we're like, okay, now we need a KP. So who's gonna be our sponsor? So we reached out. Within a week, we found a sponsor who looked at our deal, and then the next step, and they was like, wait a minute. Now we signed a PSA and we actually need to raise the money. Now
It
our
just dawned on you, right?
yeah, and it's like you know it, but it goes so fast.
Mm-hmm.
Like I've had conversation with a number of people over the course of the months, but I know that I didn't put enough effort into making those communications with more people. So it doesn't really help that I can say I have $300,000 hard and another 200 soft right now. I would like to say that I have 750 to 1 million in soft commitments. So my partner can say the same. And then our KP said, if you guys come to me and you say you have 1.5 million in soft commitments, that's awesome. Like I have full confidence we're gonna close this deal in February. I'm not there yet. Like I haven't had enough of these conversations. And it's really notes to everybody, right, on this call. It's like don't just focus on like chasing the deal and getting it under contract, because even with the right partner who can sponsor you through, assuming you have that somebody in your network, you still need to bring that money for a down payment. And I heard, you Bibi and if you guys talked about a deal when you got a deal, and it was kind of like a scramble on one of your deals. It was like giving away everything that you had basically just to keep the deal. It's
Yeah,
not fun.
it's not fun.
So the lesson learned on myself and lesson for everybody else here, talk to people about what we do. So when it comes to it, they're not surprised. I honestly didn't expect to get a first deal in 6 months into my mentorships. That's, an 80 unit, $15.5 million deal. That's a big deal. So
That's a big deal for your first deal, and you being the head of it, that is significant. But I think you need to start partnering because you might not have the strength to raise the funds. Just like me, I'm just like you, the underwriter, bring the deal, underwriter, put it under contract. That's it, be the sponsor on it and all that. To raise it and now partner with people to help bring it on board. Yes, I've been able to do those other parts. Does not mean that I will not still share, because for you to also get the best out of people, you must let go of some things. Even in the facts, even if you did literally the entire job or almost all the job, you still have to just give out some so that it is going to be more incentives for them to help you raise that fund. So that's the beautiful thing about multifamily is team sport.
Mhm.
You have to work with people because you can have on all the different hats. You will not be efficient. So please go and look for people. That deal is big for you to be handling alone. Go get people because time is ticking.
Mhm. Yep. Well, on another note, BB, I don't, Ify, thank you for all the knowledge sharing over the course of this year.
You are welcome.
Pleasure. And Pavi, like when we started, I know that you've been coming to this, but have a almost like a calling card always handy. So when you hop on Zooms, you're putting who you are, the fact that you're under contract, if you choose to, or that you're a multifamily owner operator, etc. Just some description, and then have your Calendly link ready so that you can book those calls. You should be having X number of calls every week. That's your KPI for now, right? With people you know and people new
Mm.
that you've not met yet. So there's
Yeah,
something.
so I'm actually working on something kind of bigger.
Mhm.
It's like a CRM actually that's gonna do
Yeah.
my social media, it's gonna do my newsletter, it's gonna have my digital card. Calendar is built to it that's synced with my Outlook calendar. So the whole
Mhm.
idea is that everything gets funneled through like one single system.
Yep.
Um, and
But while you're waiting for that, just
I'm working on it now. I
There's
just
no
signed
time.
up for it. Like I'm working on it now. Like it's happening.
okay.
Okay,
It's just
accept that.
it should have happened 4 months ago, right? Like I didn't know. Like I wasn't thinking that far out,
Okay.
and didn't expect that, I would have what we have on our plates right now. The good thing is we have a capable sponsor who has confidence we can do the deal. But if and I appreciate that he's pushing us to be like, you guys brought the deal and everything else, but you have to help to raise the money too, because that's part of being team.
Yeah. Yeah.
And we were upfront with him too from day one. Like, this is who we are, this is our experience, this is how much liquid cash we have, and this is how much money we both know we can raise. So he knew upfront what we were bringing to the table, not just the deal, but also individually. And it's just taking it from, now there's like, here's our three options to close this deal financially. We can do this, this, or that. And that's how they look. You guys have the next 2 weeks to figure out hard numbers of where you're gonna be so that we can make as a team an educated data-based decision on which route for funding this deal we're going with.
Yeah, so consider people who have closed in Massachusetts before, and then see if there'll be if there's space, if there's, if you have equity to give, maybe you need an additional partner, but someone
That's one
who,
of the options.
yeah,
It
okay,
just costs more, or you're giving away, like you said, you're giving away equity
yeah,
or higher interest. There's people who come
That's the
and say,
price you have to pay.
Yeah, yeah. So there's preferred equity, there's just equity partners. So I mean, you guys know it. There's so many different options that you
Right.
can bring to the table. It's just, how much are you willing to give up before you even try? Like we want to try to do a traditional syndication if we can before we go alternative routes.
Yeah, no, I wasn't even thinking of pref. I was thinking of an additional GP. Remind me to send you a name. I know someone who's close in Mass, and I don't know in Springfield specifically, and I don't know if you'll be interested in hopping on a deal.
Yeah, we
So,
knew somebody we met him in June and he's like, yeah, all I do is just GP equity partner. That's all I want to do. So we approached him and he goes like, yeah, I changed my business approach. I just do private money now. Get out of here.
oh Lord.
I'm sorry, as in these things happen, what you just mentioned is true. They will tell you this when you not get it, you go back. Oh, sorry, they give you stories. So
Yeah.
welcome to the world.
So it's like, well, thanks for teasing us like literally 2 months ago, just to tell us that you don't do that anymore.
Oh Lord.
I went through that this year as well. Mine was even 3 different people. Oh yeah, when that time comes, so just let me know. I go back. Oh no. I've changed my mind, I'm doing other stuffs now. Welcome, just welcome.
Yeah.
The market has shifted. Our underwriting department has said this. There's always a
story.
list of excuses that they just pull from. It's always the same.
Yeah.
Yeah.
So, but I would just give you this encouragement. Just keep going. There's no time. I think you should start partnering with people now. Before you know it, 1 month is gone, 2 is gone, and
Yeah.
sometimes sellers are not that cooperative. We had a seller that told us that if we don't close, he was going to add 50,000 every week to the purchase price. So we've seen terrible sellers. So you need to, and it wasn't terrible at the beginning. It was so good. He allowed our money go hard first. 550,000 went hard. Then we saw his true color. So you also want to be careful. Make hay while the sun shines.
Yep.
Okay, I think that's all for today.
I think so too.
Yeah.
I think so too. Unless somebody has another pressing question, I thank you all for your time. This has been an amazing year on the MFC Asset Management Zoom, and we will see you guys next year.
Thanks, guys.
Yeah, thank you.
Thank you so much.
Yeah.
Appreciate it. Thank you so much.
Thank you.
Yeah.
Thank you.
Bye.
Thank you. Bye.
Bye.